Marriott Vacations Worldwide offers timeshares at its 59 resorts across the globe, and its CEO, Stephen Weisz, joins me now from the floor of the New York Stock Exchange. And Stephen, welcome.
Thank you.
And Stephen, I wanted to ask you about the dollar, which hit your bottom line in your most recent earnings report. And of course, now the dollar is weakening. So how will this affect your business? I mean, you of course have properties overseas and in Europe, right?
We do, although quite frankly, the FX impact that faced us recently has not been all that great, predominantly because the resorts that we operate in Europe today are largely sold out. So we're really managing those resorts, and those management costs are actually absorbed by the timeshare owners. So it's not as much of an impact for us.
All right, but what about your properties here in the U.S.? I mean, a weakening dollar certainly is beneficial for, international travelers coming to the U.S.
Yeah, no question. And obviously, about 15% of our owners are non-Americans. And so we sell a lot to Europeans, we sell a lot to folks from South America, et cetera. And obviously the changes in currency certainly do affect us. The good news is that so far this year, knock wood, we're in pretty good shape. Our first quarter, our sales were up 9.5%, and all the indicators that we look at on a daily basis are looking pretty strong so far.
All right, you also say you're pursuing new destinations. What areas are we talking about here, and are you worried about future FX headwinds?
Well, we just announced 3 new destinations. We bought a property in San Diego, we're a property in South Beach, property in Waikoloa on the Big Island of Hawaii. Plus, we've decided to expand, working with a partner, our property on Marco Island in South Florida. So we are continuing to grow. We believe in the long term, and we think while there will be some fluctuations, we don't think they'll be meaningful in the long run, and we're very bullish about what we see the future to hold for us.
All right, and the stock has been on quite a ride so far this year, up over 15%. So what's been working for you, and how are you going to keep up the momentum?
Well, I think the important thing is we continue to try to make sure that we're doing everything we can to be as effective and as efficient as we can possibly be. Obviously, growing the top line helps. We've also been doing a lot of work on margins, which we made a lot of improvement in. And as we think about the future, it's very strong. So all the things that we've been doing have kind of hit the right notes so far, and we're very positive.
All right, and finally, just real quick, tell us about the timeshare market. Do you think there's more room for growth left, and how can investors get in on the action?
Sure. Well, the timeshare market, it's probably important to put it in perspective. The high water mark for North American timeshare was, a little over $10 billion in 2007. That number dropped to about $6 billion in 2009. Last year it was about $8.5 billion, so it's on its way back, although not at the high water mark yet.
Yeah.
The good news is not only are we a publicly traded company in the space, there are several others that are either in the space or coming into the space, and that's an opportunity for investors to get on board.
All right, Stephen Weisz, CEO of Marriott Vacations Worldwide, joining us now from the NYSE. Thanks for your time.
Thank you.
I'm Scott Gamm, and you're watching The Street.